Talk about today's dollars and inflationary dollars. You earned 16 cents back then carrying your fucking fossil.
Money isn't the root of all evil, the fucking lack of it is.
Not money, the lack of understanding money.
When I put that into emphasis, when I realised that psychological effect and how it hit our family, I FTB all the fucking way.
You are now watching the Money Mentor podcast
With Graham Home.
Graham Home.
Welcome back to this week's episode of Wilson Weekly on the Money Mentor podcast, where property news isn't just about numbers on a chart. It's a full-blown soap opera with auctions, wages, and first home dramas all fighting for the spotlight. And Doc, speaking of drama, the government's just dropped the ultimate housing twist, a 5% deposit scheme with no cap on places and higher property limits and no lender's mortgage insurance. So translation for our listeners, first home buyers might finally get a seat at the table and we might just be serving them reheated leftovers from the last boom. Well, let's get into it.
Yeah, look, it's good news for first home buyers, Rachel, of course, those that can muster the 5% deposit. That's the first step in the housing journey. And that's not getting easier because, as we've been reporting consistently for a while now, prices are rising. And of course, they're starting to accelerate, and that'll only continue with the latest interest rate cut. So we're going to get a lot more demand coming into the housing market at that sort of lower end, of course, primarily. So without supply to match it, and we know that supply has been lagging for years now in the Australian housing market, it only can mean higher prices. So good news if you can get into the market, because you'll take advantage of those higher prices. But if you can't manage that 5% deposit and the repayments, because you've got to be repaying 95% of of whatever you're buying. So, hey, that's going to take some effort with prices rising. But if you can't match that, you're just stuck in saving land for a lot longer trying to get into the market. So it's perhaps you could look at it as a short-term boost to first home buyer entry into the market, but it may actually act as a constraint over the longer term unless we can get more supply into the market. So look, I'm not poo-pooing this. It's great news for those who can take advantage of it. The government has raised the limits to which you can purchase a property in the capital cities, and there are no income constraints as well. So, some of the criticism is that, because the government is subsidising the mortgage insurance for the extra 15% that's being covered by mortgage insurance, it means taxpayers will be covering those that have got plenty of money and that still qualify for this particular scheme. So look, great news for those that can take advantage of it, and it is very popular, but it will only mean higher prices, and for those that can't take advantage of it, it'll mean a longer wait to save to get into the marketplace, because, as you're waiting, prices are rising and there's really no relief in the rental market. Certainly the prospects of, rents staying flat as they've been for the last few months over the longer term are minimal, given the same undersupply that the market suffers. So a sort of a good news, bad news story, Rachel. And of course the point is take advantage of it as soon as you can. Really?
Yeah, well, it's being really sold as that game changer, but what I'm taking away from it is our first home buyers really should take advantage before it does drive that demand further.
Which it inevitably will. That's the point. And I guess for first home buyers, it's the old story. Don't tick all the boxes in terms of your housing choices. Make concessions and get into the market wherever you can. It may mean, a unit rather than a house. It may mean an outer suburb rather than a middle suburb. So, think about making those compromises to get into the market, because the market will rise as a whole, I believe, which it is doing now, and only more so with all this extra demand coming into the market. So, of course, this is the last week of winter. So see you later, winter. Rachel, we start spring next week. The spring selling season officially will commence. I think we've already, as usual, started in August, and what an August, what a July, and what a May, and I'm getting my months mixed up, but June, July and August have all been, the winter months have all been exceptionally strong, of course, driven by lower interest rates. So, of course, this is the last week in winter, the week ending Wednesday, August the 27th. The year's just flying by, as we say every week, really. And we are in spring next week. So, but we've got some very interesting news this week, Rachael. In fact, it's hot off the press, just released by the ABS. Is the July inflation numbers, and a little bit of a surprise here, Rachael, and certainly will have some implications in regard to further future interest rate cuts. So we're going to look at the July inflation figures, also the latest wages and weekly earnings, and as usual, the last week's auction results, which here's a heads up, not a surprise. Again, strong auction results reflecting that robust winter housing market ending on a high. So inflation actually increased, Rachael. We've been used to saying inflation's falling, it's great. You know, the Reserve Bank has said we need to cut inflation before we cut interest rates. That's been happening. It's been cutting interest rates. Well, we've gone the other way over July, which has been a little bit of a surprise. The headline inflation rate, of course, we look at two primary measures of inflation. The headline inflation covers all the basket of goods, all the items that the ABS measures that we spend on, and tracks how that rises from period to period, month to month. That was up 2.8%, Rachael, which is a big rise, the biggest rise in some time over a month, and certainly compared to June, which was up just 1.9%. So up 2.8%, and that's now starting to head towards the limit of the target range, the RBA's target range to 2 to 3%. But that target range really is about underlying inflation. And underlying inflation, it was also higher, up by 2.7% compared to June's 2.1%. So this was surprise data. And I'll tell you what, we've been talking about government's, I guess we could say, incursion into the housing market. But it was because that electricity subsidy that began over a year ago is now starting to lose its impact. In fact, electricity prices have been falling month to month, quarter to quarter, as a result of that government subsidy, where all households got relief from their electricity bills. Now, no relief because electricity prices were up by 13.1% over the year to July, which is the first time we've seen a rise. And that was like the rises we were getting before the government stepped in to give us those electricity bill handouts. So that's been the driver of higher inflation. And, you know, we've been discussing that here, Rachael, about like, you know, what happens when the subsidy runs out? Do they give us another subsidy for the next year? Or is it just like, hey, back to normal with higher inflation and higher interest rates? But this will be a very interesting challenge for the government, because we're certainly still in that transition into the, I guess, the non-carbon, you know, economy in terms of energy, energy production. So, yeah, that was the big shock, up 13% electricity costs, and that's pushed inflation up. Fuel prices were also a little bit on the negative side. We've seen fuel prices also falling over the past year or so, which has helped us get inflation lower. But even though fuel prices were down over the year, they weren't down as much as they were the previous month, so down by 5.5% compared to a fall of 8%. But we had some better news in terms of rents, which continue to decline, which we've been reporting here. Still rising, but the increase in rents has been moderating, down by 3.9% over the year to July, compared to a rise of 4.2% over June. So, hey, this is the electricity costs issue that's now coming back, as we predicted. Once we ran out of the largesse from the government's subsidy on electricity, we're now starting to see electricity prices rising again. So we need to keep a very careful eye on this, of course, because it's important for interest rate policy going forward, which I'll just discuss in a second. But we can see those ups and downs in terms of electricity, particularly much higher over July compared to June. Fuel not falling as much over July as it did over June. Rents, better news there, slightly lower rents over, this is the change over the year, to July compared to over the year to June, and you can see that big change in overall inflation, 1.9% up to 2.8%, and that'll certainly give the Reserve Bank something to worry about. So just looking at the trend, you can see here that's sort of come out of nowhere, Rachel. When you look at the trend, just sort of down, 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 then whoop, up we go again. And as I said, it just shows you the impact that electricity costs have had on lower inflation. When we lose that capacity, we start to get higher inflation again. And as I also mentioned, the oil price has been a factor, as we always say here, in lowering inflation. We did see over the previous month, and this is tracking forwards with oil prices, because we know what the oil prices are over August, pretty much as August has finished. They've fallen, which is good news, over August, but they did rise and were steady over July, and that's been part of why we didn't see the same decline over July as we did see over June. So it's an important model in terms of inflation. Overall inflation is what happens with petrol prices. And you can see there that annual change is now improving, so that should be better for us when we get the August monthly inflation data. So that's an improvement again in the oil price. But as we've seen, it's probably a bit more about electricity now than oil going forward. And just looking at the big picture for oil, we can see it's just sort of started to ease a little bit, and we've seen that with those latest falls. So what I can say about inflation, Rachel, and this is important as why we show these things, because this will determine our next interest rate cut. So we're going to have the Reserve Bank really focuses on the quarterly inflation data. That's what it did prior to its cut in August, because it was waiting for the June quarter data. Now, the September quarter data for inflation from the ABS comes out at the end of October. You still with me, Rachel?
I'm still here.
So that will be the two things. That will be obviously very important for the Reserve Bank. That says that it looks very closely at the quarterly data rather than the monthly data. So what I'm saying is that it will wait until October, that October data comes through, before it makes a decision on interest rates, likely, because you can never say completely what the Reserve Bank will do. But the point is that this is the first month of the 3 months of the quarter over September, and it's not a good result. So we'll be looking very closely at next month's monthly inflation data. That's August, which is looking a little better in terms of oil, but it's electricity that's the key thing. And then, of course, we'll be looking at the September monthly data, which will come out around about the same time as the quarterly data. But my point is that this is just very unexpected in terms of a shift upwards, which has been offsetting a downward trend in inflation, which has been running for quite some time. But it does reflect the fact that it was always going to run out that subsidy, that electricity subsidy. Now, Rachel, we've got to talk about interest rates. As I've said to you, towards the end of October, we will get the next quarterly inflation data, which the Reserve Bank will be looking at. And guess what? The meeting for the Reserve Bank there is the famous Melbourne Cup meeting in November, which is a traditional movement of interest rates. The Reserve Bank looks towards that November interest rate decision to either raise or cut rates typically. And it coincides with Melbourne Cup Day, because it's sort of like the last month of the year that it can do something which will actually have an impact on the economy, because the December month is, obviously we're into holiday mode. So I think that, all eyes will be on what happens with that September quarter data that comes out at the end of October. It will precede the November meeting of the Reserve Bank, and we will have to start to see an improvement in these monthly data, particularly next month, to get us another interest rate cut. So it's as though the whole scenario's changed in terms of the outlook for interest rates. I would have thought that if we had have seen a continuance of lower inflation, as we've seen for a number of months, for a number of quarters, then it would have been very much alive to see another interest rate cut in November. But we've got to start. This is now pushing out up towards the limits of the Reserve Bank's target of 2 to 3%. So you can see how important this data is, because it really shifts the energy from a likely interest rate cut in November on Melbourne Cup Day too. We've really got to wait and see what the data tells us between now
So
and then.
what are your bets on at the moment? A hold?
Yeah, I think so, because this data is really, a bit shaky. I'm not sure that this isn't the beginning of a trend in terms of higher electricity costs. I mean, the electricity costs have been lower because the government's been paying our bills, right? They're not paying the bills anymore. So they've got to start thinking, okay, we've got to start paying the bills again, or we're going to see higher inflation, which will mean higher interest rates, So, and I'm not sure the government would be terribly happy about higher interest rates. As I said, it's now a very fluid environment. We should watch very closely the next monthly data set, which is which of course is the August data set, which will come out in a month's time. So interesting times, Rachel, and we're doing this, of course, to alert the audience to the prospects for interest rates. And of course, that means the prospects for the housing market going forward. So we move on and let's have a really quick look at some data that tells us how our economy is performing. A little bit backward looking, Rachel, but nonetheless, it's interesting. We usually show this stuff. The National Wage Index tells us what wages, according to the ABS index, are moving on a quarterly basis. They're up 0.8% over the June quarter, which is the latest data we have, which is a little bit lower than the 0.9% reported over the March quarter. Annual wages were flat, up 3.4% over March. There's our chart for wages. Now, I just got to say this, Rachel. It doesn't add up to me. We've got a very strong labour market. Nothing's changed in a year in terms of the unemployment rate. We've still got one of the highest participation rates on record. Employers are still struggling to find workers. There's still plenty of jobs around, and yet we're not seeing wages increase. So this is good news for the Reserve Bank, because it doesn't want to see higher wages, because that will typically lead to higher prices, because bosses will have to put up their prices to cover higher wages. So this is okay, this number, but this number just doesn't really add up, because when we look back to previous periods where the economy was tracking as strongly as it is now, you can see there back at 2007, we had wages growth at over 4%, which we had like a year ago, right? So all of a sudden, this series is, looking a little strange. So I would take this with a grain of salt. But if it is, the one thing it does reflect is that with inflation now falling below 3%, it means that real wages, that's the difference between prices and wages, are actually growing for the first time in some time. But I would be a little bit advised as to, it's just a few question marks here, Rachel, in regard to this data. It's not supported from my point of view. But anyway, it is what it is, and we move on. And another indication of earnings our workers are doing in the economy. Average weekly earnings, New South Wales now above $2,000 a week in terms of the average adult weekly earnings. Everybody around about the same mark. South Australia down a little bit. Western Australia, as usual, heading the major capital cities. And when we look at the growth in wages, South Australia actually leading the charge there, up by 6.6%. And you can see here, Rachel, wages are growing faster here, if you average it out, than the wage index. So, this is May, this data. So, it just doesn't sort of correlate with what we've seen at that 3.4% increase with the wage index. This looks to be a bit higher if we average that out. But anyway, some further information again reflects this is a very strong economic measures in terms of incomes, except for that wage index. The average weekly earnings are still looking quite strong, and we would expect that with such a strong economy reflected by that low unemployment rate. So let's move on, of course, and look at the latest weekly auction results. Another good week for the auction market, heading to the end of the winter market, the winter season. Again, Melbourne and Sydney continue to lead the capital cities in terms of results. Strong results, nearly boom time results, which we sort of characterise at around about an 80% clearance rate. We're also seeing, as we usually see at this time of the year, a significant rise in listings. So despite more properties coming into the market, they're still being cleared at high rates, at around about the same rates. And we will continue to see that over the next few weeks, next few months, higher numbers of properties going under the hammer. But certainly all markets generally are in favour of sellers. So that means it's a good time to sell your property because there's plenty of buyers out there that will bid for your property in general. So here are the results. Sydney 900 auctions, well up on the week before, just about the same result as the week before, 79.5%, Rachael. Very strong result. We can think about the B word very clearly now in Sydney. And it'll be interesting to see, and I don't want to give anything away, what the data tells us for August for prices. We'll look at that next week as well, the August price data. But I can give you a bit of a clue. It's pretty strong for Sydney. Melbourne, another good result for Melbourne. Mid-70s. It's been tracking in the mid-70s for quite some time. It also had a big rise in listings. And look at that. It's pushing up towards 15%, same as Sydney, higher than where it was a year ago. Well, Sydney's 5% higher, but Melbourne's certainly well ahead of where it was a year ago. Brisbane waxes and wanes a little bit and does float around that 50% mark, as it's similar to where it was a year ago. Adelaide just also has fallen away a little bit over the past week, higher listing numbers and under 70%. But Canberra really keeps on keeping on. Certainly couldn't match the results of the. I'm just going back to a slide of the previous week, where it had that crazy 86.2% clearance rate. 73% result in Canberra, still the best we've seen the Canberra market perform for a couple of years. So really all those markets are really chugging along in positive territory. Clearly markets in favour of sellers, and Sydney and market head and shoulders above the rest, as we've seen really week after week, and also significantly more listings than the rest of the market. So we will be closely watching the price results for August, given it's been such a strong month for auctions. We can see when we look at the trends, Rachael, they're all the same, rising through the year as interest rates fell well above where they were last year. That's Sydney, that's Melbourne, same old, same old. In terms of the trends, it's quite remarkable, but then again, not surprising given the impact of lower interest rates on housing market energy. Adelaide the same, dipping a little bit over August so far, Adelaide, but nonetheless still tracking higher than at the beginning of the year, where it was a market under a little bit of pressure. And the Canberra market, check out Canberra. This is heady stuff for Canberra, averaging 75.5% so far this month. So that Canberra market looks to have well and truly turned the corner going forward. If you're looking for the latest auction results, the Capital City snapshots are released on my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday night at 6 o'clock, and the full national report, which includes the regional breakdowns for Melbourne and Sydney and the top 10 sales under the hammer for each of the capital cities over the week. That's released Sundays at around 9 o'clock, so get a hold of that. If you've missed the latest auction report, there's a QR code. You can scan that, and it will give you a link, a link to a PDF copy of the latest weekly auction report. And we finish off, Rachael, as usual, with the greatest giveaway in property, and that is the Infinity My Housing Market app, which allows you to look at what's happening on a suburb basis right across Australia. Every suburb that has data is featured in this app. It's asking prices and asking rents, so it tells you what vendors are asking and owners are asking for their rental properties and for their properties they've got for sale. You can get hold of that fantastic app, which is brilliant on your phone. You can check out what's happening on a suburb level, whenever you like. It's updated in real time, so you're getting the latest data. But you will need to get a password to access that, of course, and you'll get that through the good folks at Infinity. And like I said, it's well worth it, Rachael, as you know. Here's a screenshot for the app to tell you what, to give you an example of what you get. You can filter it for price or rents. You can filter it for the capital city regions or the outside capital city regions. Here we're looking at the capital city region of New South Wales, which of course is Sydney. Blacktown is the suburb we've selected. We can filter it for houses, units, or townhouses, and also the number of beds. So these are asking prices, and what we get is not just the median asking price for a 4-bedroom house in Blacktown. We also get the high and the low, so you know the range of between the high and the low for properties in each particular suburb you select, and also the number of properties that are for sale. Exactly the same, Rachel, for what's on offer in the rental market, and you can see there for Blacktown a median rent of a 4-bedroom house of $750 weekly, and lower 570, a high of 850, and 20 properties currently for sale. And for investors, we also have the latest yield data. So these are gross yields, which is the reflection of the annualized current rent divided into the current asking price. These are ranked the top 10 in each of those regions, either the capital city region or the outside capital city region. And that's the ranking there, shows you the return on investment, also the vacancy rates for each one of those suburbs, and the number of properties for rent or for sale. And if you click on the hot link there that I described, you actually get a little map of where this suburb is. Oh my God, it's so good. So get a hold of that one. It's great. But get onto the folks at Infinity who will give you the password to access what is a very popular little toolkit for property decision making. So next week, August home prices, the July home building approvals, and as usual, the latest weekly auction results will be for the last week in winter. So until I see you in spring, Rachel, thank you very much. And if you have missed today's epic presentation, there is a QR code which will give you a PDF link to the whole thing, and you can enjoy at your leisure. So enjoy the last few chilly days of winter, Rachel, although I think you're up north, so it's nothing for you. But I'm in Melbourne and it's bloody freezing here, let me tell you. So I will be up on the Gold Coast for another one of the Infinity extravaganzas, which I can hardly wait to attend. So I will see you all then.
Oh, wow, Doc. Amazing data. As we've seen there, Melbourne's rebound has been very strong, but nationwide, really, we're seeing very strong numbers with our property. And I think we are going to see more demand with that deposit scheme, especially with you using that boom word, Doc. It's almost with a capital B, I think. So I think it's a very strong message to get in the market. And I think those home building approvals next week, that data is going to be quite telling as well. So as always, Doc, thank you so much. That is a wrap for the Wilson Weekly episode. Your weekly reminder that in property, the only thing moving faster than an auction clearance rate are the government's housing headlines. Same time next week for more market truths and less market spin. See you then.
I love it, Rachel. See you later.
You're fucking gone. See ya.